Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, December the 22nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. So take what we teach you and implement them into your own portfolios, because what I'm doing could be counterintuitive to what you're already doing. Having that out of the way, let's get this on. We did get some big economic data out today. Final GDP for this quarter was 2%, which really drug down the average for the year, and it came in below 3%, which puts us at a 10-year average of below 3% growth. That 2% is also down from 3.9% last quarter. One caveat to that number, keep in mind that 17% of that GDP number is generated through healthcare, and healthcare prices have been going up through this Obamacare. So that's really driving force of GDP, almost a fifth of that number. So that's pretty big and something to keep in mind. Let's look at the NASDAQ chart right here. This is the E-mini NASDAQ. We are up on the day by about 3 points, but something interesting, we're right here at that resistance area. Something also to check out, let's just look at what the Fibonacci lines look like here, and I'm just going to kind of ballpark it here, see what we can line up here. For some reason my Fibonacci doesn't want to work out, but anyway, I was just going to see what the Fibonacci lines look like here on this. Anyway, moving on. See, I do have the Fibonacci on there, so let's just see what it looks like. So if I do the Fibonacci, is there any reason why you don't want to work? All right, so the computer doesn't want to work for me. All right, anyway, moving on to the E-mini S&Ps. As you can see, we're up about 7 points here also. It's created a value area low here, and we've gone through it. So for the day traders, if you push up through the daily value area, that would be a time to buy it if we settle above that value area low, because it's going to want to push to at least the point of control, and that would be a place to take off some of those, and then if you punch through the value area high, to take off the remaining ones. That's just a day trader kind of thing if you're scalping. A couple of trades that I've taken off today now. ADM, as you can see, ADM took a nice little pop here today, and pushed away after testing these 34s. Came down and tested my 34s after putting this trade on, and has pushed up and away. So I was able to take this off for well over a third the width of my strikes. And then I had on the January 33-34 put spread. Originally sold it for 31 cents and was able to buy it back this morning for 11 cents after we got this nice little rally here. So entering that trade, I do a third the width of the strikes and then look to cover it at 50% of max profit. I was able to do well over that for about 66% of my max profit. So on to Caterpillar, another trade that I took off. As you can see, Caterpillar's had a big up day also, up $3, and that's up about 4.5%ish. So in Caterpillar, I had on the January 72.5, 60 strangle. Originally sold it for 93 cents and was able to buy it back for 48 cents. So I only had that trade on for a couple of days and was able to take that off for almost 50% of my max profit, pushing up against this resistance area. So I wanted to take that off, given that could be a resistance area there. So, and with a big up day, it might have a bit of a pullback. So that looked like a good time to cover that one. And XOM's been trending here, but as you can see, I've gotten the volatility contraction that I was looking for when I put this trade on. volatility was higher, and now that it's come off, the market hasn't really done a whole lot. But when that volatility comes out of those premiums, that's where you can really stand to make your money. And I had on the January 82.5 call spread, or calls, sorry, and originally sold them for 63 cents, was able to buy them back for 31 cents. So I got 50% of my max profit, and this bit of a sell-off in XOM helped out. Exxon Mobil, like the rest of the sector, is not doing too well with oil prices continuing to go down. And WYNN, I looked at WYNN. It's really getting into this little trending area here, and I'm going to look to try and put on an iron condor, but I'm going to leg into this one. It looks like we pushed up again here, so I was looking to put on the upper wing of this iron condor now, and if I get a bit of a sell-off, then I'll look to put on the lower end of that condor. But right now I have on the January 72.73 call spread and sold them for 29 cents. Not quite a third the width of the strike, but it is pretty close. So I needed to put on some trade after taking some of those other trades off. So that's what I was looking to do. Friday, or our Friday webinar, is going to be tomorrow. So go to protraderstrategies.com and get signed up for that. We're going to be building on this trade where we've been talking about the NYSE is getting rid of stop orders. So this is a way to supplement a stop order with options. And we're going to be creating a strategy around that. We're going to be building on the collars that we did Friday, and the Friday before that we did puts. So we've kind of built along the lines, and going to continue to build on that tomorrow. So you can check that out. That's about all I got for you guys today. Keep in mind, all of these markets are going to be pretty volatile the next couple of weeks, or this week and going into next week. You might get a bit of a push up for some window dressing, year-end window dressing for some of these funds. They're going to try and defend their position probably rather vigorously, so we could see a pop up in that. But as I've been talking about, the overall economy is not doing that great, and we could really see a bit of a sell-off, at least going into the first and second quarter. It could even look like we're going into a recession in the second quarter. So keep all of that stuff in mind when you're putting on these trades. Make sure you have the protection. That's why I'm talking about all these different ways to supplement the stops, because we're at pretty much, very close to the historical highs. And if the overall economy really starts slipping, these types of strategies are going to be really important to have it in your arsenal. All right? That's all I got for you today. If you can't take that, take it easy.